SEBI order against Price Waterhouse network firms in India. 9 years after the Satyam scam came to light, SEBI has found that the company's audit firm Price Waterhouse is guilty of abdicating its duties and also of involved in helping the fraud take place. The regulator has barred PW network firms from issuing the certificate of audit for listed companies for 2 years. PW partners Srinivas Talluri and S. Gopalakrishnan have been barred for 3 years. In addition to that, the two partners that I just mentioned and Price Waterhouse Bangalore have been ordered to disgorge wrongful gains that amount to approximately 27 crore rupees. This, guys, is an unprecedented order by all measure. I don't think I have in my reporting career seen SEBI take this kind of action against an accounting or audit firm ever before. Now, it's an old story by all measures because we've been through, the Satyam scam, the recovery, the sale, and God knows how much time has passed by, right? 9 years. Yeah. But the reason why it's important is for two counts. I think what SEBI found wrong or wrongdoings by the PW firms and the two partners, and why SEBI decided to take action against the entire network of firms, right? Because this is really large-scale action. I mean, no audit certificate for 2 years means no audit business for 2 years. And that's substantial for any large audit firm, especially one of the big four. I don't think, in fact, I'm not sure if I recollect, if even any other global audit regulator has taken this kind of action ever before. So I find this, really, really interesting to watch. Now, let me just take you through the 5 specific grounds that SEBI examined PW's behavior on. I think, the first one had to do with, and I'll come up on your screens, had to do with non-existent cash and bank balances of about 5,000 crore rupees. This is between the periods of 2001 and 2008. And effectively what SEBI has found is that the auditors absolutely took no effort to verify these bank balances. I'll give you one instance. They cite a New York account of Bank of Baroda, which was the most significant current account of Satyam at that time. Almost 70% of the cash balances were in that. And they said in 8.5 years, PwC did not once request confirmation of the money in that account. And in various different parts of the order, it suggests that PW often accepted the company's confirmation of the balances or bank confirmations through the company. So they weren't writing directly to the bank. They were writing to the bank through the company and receiving responses through the company, and never did bother to actually do any independent verification of these accounts. So that was, I think, charge number one. The second charge had to do with inflated sales revenues by accounting for about 7,500 fake invoices. Now, in this, SEBI has said that the auditors failed to walk through tests in respect of the invoices, so they didn't really check whether these were real invoices or fake invoices, even though in many instances they could have actually undertaken that effort. They feigned ignorance of internal control measures. They ignored internal audit reports, and they did not even follow the accounting standards or the guidelines that come with accounting standards on how you're supposed to do all of this verification. So that was the 7,500 fake invoices. Now, of course, PW has offered defenses in all of this. They said, how are we to know these invoices were uploaded through? There was some difference between how they were checking PDF documents. The invoices were uploaded through some Word documents, and they said, if the company is determined to scam you, what can you do, etc., etc. But SEBI has obviously not found much to go by in that. The third one has to do with, and it'll come up on your screens, has to do with hundreds of crores of rupees in debtor positions that were overstated, and again here too, so, SEBI has found that enough verification was not done. So if you look at the quote on your screen, it says that PW failed to perform the basic audit function of ensuring adequate external confirmations of debtor balances from the debtors in question. There were 2 other grounds on the basis of which SEBI examined PW's behavior. One had to do with the failure to detect receipts of about 1,400 crore rupees in the bank account, and the other had to do with variance in TDS. So TDS paid and TDS claimed in the books. But on both those grounds, SEBI said there wasn't enough evidence for us to say that, you could have determined there was something wrong, and therefore we're not, sort of counting these 2 bits in. So in summary, let me bring up the main plate. Here's what SEBI has found wrong with what PW did in the case of Satyam. Gaping holes in the audit process, the attitude of professional skepticism was missing. In fact, it points out to a whistleblower letter that an independent director had received just days before Ramalinga Raju, wrote that letter and made the scam public. And it said the independent director sent that letter to the auditor, and the auditor took no action, even in that brief period of time, on account of which they have said that, look, you didn't do your job as an auditor well enough. Now, PW has argued that you need to prove mens rea, which is you need to prove a guilty mind, that we really did want to support this fraud in some fashion. And SEBI has taken the position that no, we don't really need to prove mens rea. We've proved that, you could have done all of this and you didn't do all of this. And so these are the grounds on which they've taken action. The second part to this entire conversation is why take action against all of the network firms and not just the 2 firms that were actually directly involved in the audit of Satyam's books and the 2 partners that were directly involved. And they said, look, we've examined how PW works in India. It is a network. It has resource sharing agreements, etc., etc. Even the audit agreement that was signed with Satyam said Price Waterhouse and didn't specify a particular geographical location of a firm, because as you know, these firms work in small partnerships across the country. And so and then they cited the action taken by the SEC and the PCAOB from the US, which is the super audit regulator in the US. And they said they too detected that, there was negligence on part of the network. Don't go by the word negligence, but that they didn't do their job well enough. And on the basis of which they said that when you offer a combined brand promise, then you've got to deliver on that combined brand promise. And because of which you didn't, we're taking action against the entire set of PW network firms in the country. Fairly unprecedented from that point of view, and a large disgorgement order as well, which one PW firm and the 2 partners will now have to cough up about 27 crore rupees, which is, also substantial, given that they've never done this before. So 13 crores, which was the fee that they received from Satyam, and then 12% per annum interest, right, from that time in 2009 to whenever they pay it. So that's the big one, and no audits for 2 years. So this is a really, really big one, and I suppose this is SEBI showing its teeth. But let's get an expert perspective. We've got Amarjit Chopra, former president of the ICAI, which is the Institute of Chartered Accountants of India, to weigh in on this. Mr. Chopra, you would agree that by all measures this is unprecedented. I just want to put one thing to you in your very first answer itself. All through, Price Waterhouse has argued that SEBI doesn't necessarily have full jurisdiction in this matter, and that in fact only ICAI has jurisdiction. What do you make of SEBI's order?
You see, but the most unprecedented move that we have had in this country. But so far as the viewpoint of PwC is concerned, let me say that there is no doubt that ICAI has the jurisdiction so far as the disciplinary proceedings are concerned. But in the entire thing, one thing was coming to light, that the institute didn't have powers to debar any of the firms, because as per the CA Act, even today, we can only debar a member from practicing or undertaking a trust function or doing some other professional work. But in 2010-11, we had actually requested the central government to undertake a change in the CA Act, whereby the ICAI also has the authority to debar the firms wherever we feel that there are huge kind of frauds like this, or the other partners were in knowledge of certain things. But so far the government has not acted on that. I am not getting into that.
Mr. Chopra, would you say that SEBI's action against the entire PW network in India is justified, as opposed to just curtailing the action?
I will say that they are all the regulators for the listed entities, and if at all they feel that public has been cheated, they could have gone ahead. One may say that ICAI should be the only regulator, but if there are certain compulsions by way of which certain action cannot be taken against the firm, probably some other regulator steps in And
no, I get it. I understand that you're saying that, yes, SEBI does have jurisdiction. I mean, I don't think even I would argue that it doesn't have jurisdiction given that this was a listed company. I'm just wondering whether you agree with the fact that SEBI has taken action against the entire network of PW firms in India and not just the two firms that were connected to the audit.
There is no point, Manka, that we keep on acting against a particular entity only and not against the other network firms, because if they can keep on taking the attest function of the other major entities, there is no point in acting against only one particular entity, because we have PwC Bangalore, we have PwC Delhi, we have PwC Mumbai, we have PwC Chennai. I think somewhere or the other, this is one thing which needed to be plugged. And today, probably someone would start realizing, and if you look at Companies Act 2013, no, even when the Section 144 comes into play, where it talks of the certain services which cannot be taken up by an auditor, there it talks of all directly, indirectly, or by any other related entities. Let's be very clear about it. So the government in the Companies Act 2013 has already undertaken this particular check. So if SEBI has gone ahead and said that if one part, after all, you are sharing profits amongst yourselves, you cannot be immune, you cannot be given immunity against certain actions of the certain other partners. So to my mind, there is nothing wrong, but what really baffles me is that you are saying only in respect of the listed entities. Probably SEBI has only jurisdiction.
I would imagine SEBI has jurisdiction only on listed entities. Everything else, the Ministry of Corporate Affairs or the ROC has to take action.
But ROC may not be able to take action because so far as Mr. Taluri and Mr. Gopalakrishnan are concerned, the institute had debarred them for the lifetime.
Right.
Already, their name has already been removed for the lifetime because that's the only penalty that the institute could have been imposed.
I think only one of them has been debarred, sir. The second one, I think proceedings are still going on, if I read the SEBI order correctly.
I can only tell you that Mr. Gopalakrishna's name was removed for the lifetime, if I'm not mistaken. And in the other cases, they have been moving the courts. Tribunal has already upheld the ICAI's order, basically. But then these things continue.
So let me put one final question to you, Mr. Chopra. I think that, at all points on all the charges that I've detailed that were laid out in the SEBI order, many of the arguments that PwC has put up in its defense is that, if the company or its officials want to scam an auditor and go to such great lengths of creating, fake letterheads and fake bank statements and all of that, it's very difficult for an auditor to keep verifying. And I'm putting this argument very, very simply. PW has also in its statement late last night said that it hopes to seek a stay and obtain a stay on this order even before the order can go into operation, though it is operative immediately. What do you make of how much success PW could potentially have in defending the point that, look, how many verifications can we do? Should we be verifying all of this constantly? How much independent verification is required?
If you really ask me, auditor today is in a very, very precarious kind of a position because the promoters, the bankers, the other people can also be in league, very frankly. But here, of course, I don't have in my hand the original documents. But if SA 505, that is with regard to the external confirmations, has not been complied with, and proper verifications have not been taken by the auditor can definitely be held guilty. And I think the entire flow of the order probably seems to be that PwC auditors were negligent in obtaining direct confirmation from the bankers, etc.
That's right.
But so far as these fake documents are concerned, with regard to the invoices, etc., I think it's the major challenge that the audit profession faces today. After all, even with regard to title deeds in respect of certain properties, few years back, the banks were facing the same problem. When this colored Xerox came in, it was difficult to make out which is the original and which is the duplicate.
Yes, sir.
But we have to live with these challenges as auditing profession, basically. And I think the institute, the other regulators need to come together and really to give something by way of which the auditor also feel protected. Because the way the frauds are going on, by the companies, I think the auditors are in a very, very difficult kind of situation. And I have some sympathies with the PwC on this particular matter. But then, at the same time, if certain auditing standards have not been complied with, which should have been complied with, and it is a major fraud, basically. Right. In that case, I think the law has to take its own course. Whether they get a stay or not, I'm not really bothered about it, because I think in these kind of cases, the courts jump to give the stay. Because I know how much time I lost as a president only in getting the stay vacated so that we could proceed against the PwC in that particular.
Of course. Yeah. I remember that, sir.
Yeah.
Mr. Chopra, this conversation we'll leave here for now. We also have to head into earnings season, but we appreciate the insights you've offered this morning.